We're going to be going over an example of how to use the flowchart. We're going to be walking through an example of RB of Wednesday's trading. So let's go ahead and go on the charts real quick. Let me show you what we're really framing here. We're framing a reversal off this external high. We see Monday's trading, Tuesday's trading, kind of just range, right? So when we have a consolidation, you manipulate one side of the range. You want to trade, away from this external range high into the failure swings, right? If we go over here to lessons, we go to targets. This is kind of what we're looking at here. Whoops, I go to targets. Right, it's kind of this framework, right, where we manipulate one side of the range, we target failure swings. So let's go through the flowchart, right? So idea is always going to be a daily profile away from an hourly or 4-hour key level, formerly high or low today. So do we have a 1-hour or 4-hour key level? Yes, right? We have this 4-hour external range high to form the higher low today, potentially. So now let's walk through the next question. So since we do have a key level to be hit, we go over here. Right now we're going to ask ourselves, does this daily candle support expansion? So look how far this candle here has traveled away from the daily open. It doesn't, right? So what we know about reversal candles is they create these large wicks and are more likely to close with that smaller body. So we have a profile to trade this, and that's going to, if it doesn't support expansion, well, that's when you go over here and does that framework support trading a reversal candle, right? This is in my course. If you go to here, it's under the large or the wick size, right? Does that, the current daily candle, is it forming like this, right? Is the high of the day formed early on, or the low of the day in this case, formed early on in the candle? So there's enough time to reverse and expand back to the daily open, because remember we adjust our targets here because we know it's not likely to form this large bodied candle, so we have to adjust our targets at the daily open or a little bit past it, right? So let's go back to the flowchart. So since it does, now ask yourself, does the current 4-hour candle, right, align with expansion? In this case, if we go to the 4-hour chart, it depends when you are viewing this. So when we hit this high, right, it doesn't, right? Because this opposing run is too large. So when you go back to the flowchart, right, if it does not support expansion, you have to wait for a new 4-hour open, right? So once you wait for 10 a.m. to open, we go back to 4-hour expansion aligned, okay? And since it is aligned, now we have to confirm that with a T-Trades fractal model entry, right? So when the new candle opens, what do we see on the 1-hour time frame? We see within the 6 a.m. candle, the last hour, 9 o'clock, we form a fractal model, right? So what, reversal sequence is this? If we go to entries, we see this is the continuation, where we are opening the new 4-hour candle within an already existing T-Trades fractal model reversal. So we already have a reversal on the lower time frame. Now we're just waiting for that new 4-hour candle to align itself with expansion to trade away, right? So when we drop down, just using T-Trades fractal model entry sequence, do we have a CSD within candle 2? Yes. So when we open up candle 3, right, all we need to really do is confirm this candle 3 wick, which happens right here, this ideal swing formation. So that's a potential entry, right? You can target, like I said, back within the candle's range or at the current day low, which is about right here, right? All these unestablished lows, this low resistance. So you could target at the daily open, right? Or even down here for runners. Now this is our final TP because this is already, below the daily open, and we're already not expecting price to expand way down here, right? You can see that it closes, kind of with a small body, if you look here, right, with that small body. So what's another potential entry? Right, we have this swing point formed in the market, so trading a candle 3. Now the reason why you can trade this, it's kind of a large opposing run, but here's why. So this candle opens up with no wick, right? So it opens high first, which is how we want to see, bearish candles form. Just like this bearish daily candle opens high first, right? That's very ideal, right? And then, right, we have this SMT. So you're gonna have to imagine it like this. Since you have an SMT, this is the opposing candle that we're going to use for a CST, right? So you get your CST there, and you could trade that. It's a little bit late in the candle, kind of up to you, but since this has no wick, it's very high probability that it's going to get there. And at this point, now we have failure swings, right? If we look here, right, you have all these failure swings, so that's a potential other entry, but this is the ideal entry, right? Position yourself above the daily open and around the opening price of that 10 a.m. candle. So hopefully that helped and cleared some things up there.